If you're looking for the most effective strategies for swing trading, I want your full attention because I'm about to reveal the most important smart money concepts that you should be implementing in your swing trading. I will share how you should read the higher time frames and how to trade order blocks on a daily or 4-hour chart. Because we are swing trading, we only need to focus our attention on the higher time frames. So let's jump into the chart. So now that we're on this monthly chart, I've already drawn out our current monthly high and low, as well as the previous month's high. I did have the previous month's low already drawn out, but it was becoming an eyesore here on the lower time frames. But we've already actually violated that previous month low, and so I'm just reading, the price action. I'm seeing that, okay, we're clearly bearish, right? And I see that the current monthly high has been created. All right, so we've manipulated to the upside, and now we're continuing lower. We've already made a monthly low. We're getting some rejection. We're going to go on a lower time frame and refine it and see what's going on there. But we have 18 days left in the month. Now, a lot can happen in the 18 days. Like this, it could have made this low, and now it just completely reverses and price goes up. But we're not looking to make a prediction that far out anyway. We're just looking to see the most logical areas of where price could draw to. So if we're bearish, we're bearish. We're sticking to that until proven otherwise. Now, we're looking at the next areas or the next levels where price can attract to, or the next draw on liquidity. And we can see these old lows from April and February of 2020, or March 2020, I should say. We can see where price left these old lows, where price could essentially come into and attack those lows. And but as we know, price does not work that perfectly, right? We're not going to just see, it can work out that way, but typically you have to be prepared and prepare yourself for it to give you some sort of roller coaster of a ride. So we'll go into the weekly chart and we'll kind of refine where we are. And so based off of this weekly time frame, we can see that one thing that concerns me, we're making lower lows and lower highs as such, right? The only thing that concerns me is this leg right here. Okay, this current leg of price action, it's at an extreme, right? It just, price just dropped, and a lot of that had to do with fundamentals playing in the background. But whenever I see, from a technical perspective, when I see price just drops, just consecutively week after week like this on a higher time frame, or even on a lower time frame, you usually see structure give you some sort of correction or a pullback. And we made that current monthly low, right? And like here, and we rejected hard from that low. So it wouldn't surprise me if price actually did something where it came back up, popped up, and gave us a little pullback, and we actually violated the lows to continue lower, right? And now this is something that can happen over a course of months, right? Because we're looking at a weekly time frame. So we're not actually executing on this weekly or monthly time frame. We're actually just trying to see where the order flow is and just trying to make an educated guess where price most likely will draw to next. Okay. And so this is in my mind, but this is over a course of several weeks, several months to actually play out. But I'm just taking heed to seeing that, just based off of what we've seen in the past, right? Anytime there's like a drastic drop, there's usually a strong pullback. Okay. Now, on this weekly time frame, I'm just looking to refine areas of where price could draw to. So right now, I do see we have a demand zone here, or a bullish order block here, and this is where we actually got that. We actually got it right at the body of that order block. Okay, price came into that level and it rejected immediately. Now you're going to see that with supply and demand zones or with order blocks. You'll see immediate rejections like that. But that doesn't mean that price can't continue lower and attack these other areas, like these old lows and such. So now on a weekly time frame, I see that I'll delete that because they become an eyesore on the lower time frames. So as I know, we've hit this order block, so we should see some rejection. Okay, we got a day left in the weekly time frame. Because we're swing trading, we're looking to hold this over a course of a couple of days, maybe even a week or two at the most. So what I'm anticipating, or how I would look at this, is because we just hit that bullish order block, I will see price, I will look for some sort of pullback, kind of what I showed earlier. So I would look for at least a pullback into this area here, and we can continue lower. Now this is where, once I'm on the daily chart, I pull out my Fibonacci, because that actually tells me from the most recent swing high to the most recent swing low. It gives me a better idea of where price could actually go. So if I were to go from this swing high to that swing low, what I'm looking for is price to come above that 50% level, which is kind of like a fair value level, okay, for price. And I'm looking at it for price to come into a premium price for us to continue lower. So with that being said, I see the 61, the 76. Those are the two levels. For anywhere from the 50 to the 76 is where I would tend to like to enter. Now I'm going to look, and I'm going to refine and look for order blocks on the lower time frame, such as like the 8-hour chart, right? So I'll look at the 8-hour chart. I'll come here, and I see that we have this demand area. I'm sorry, supply area. This bearish order block. Okay. And what I'm going to do is I'm going to just take my fib out, and I'm going to run it from high to low, right, as such. And at that low of where this order block starts, I see that it's lined up with the, not perfectly, but with that 61 to 76 level. So this is a key level where I would like to potentially enter this trade. Now, what I like about swing trading, it's good for people who have shit going on outside of day trading. I love to day trade, but there's times where I don't want to wake up, during the early New York session and just, pick apart the 1-minute chart and 5-minute chart. Sometimes, I'm not emotionally in that state or that place to where I want to put myself through that rigorous, analysis and just entering and exiting for small amounts of pips. Sometimes I just want to come to the chart. I want to see price. I want to do my fundamental analysis, and then come here, do some simple technical analysis like I'm showing you here. And I see my level of where I want to come, or where I would want to enter the trade. I'll enter at that low. I'll put my stop loss right above, the current monthly high, because if we've already made the high, there should be no reason for us to come back up there, which it could happen. It's all about probabilities, but I just want to come place a trade, and get me a 1-to-2, 1-to-3, 1-to-4 risk to reward ratio. I'm not as hard on it as some others are, because I understand that with swing trading, it's for, it's medium term, or it can turn into a long term style of trading, even into an investment of some sorts. So what I'm looking for is to enter. Now, if I do want to refine, I will, maybe come in at the body of that candle, of that order block, and we can actually refine this to the 4-hour chart. right? And then we could actually look to see, okay, well, this last up candle before the down move, we can actually slice our, by more than half. We can slice our risk to about 45 pips. And that same trade got a 1 to 5. It went from like a 1 to 2 to a 1 to 5 trade. Now, if we want to attack that current monthly low, right, like we're waiting for price to come back in up here, and then we'll take price back down to that current monthly low. That would be our target, and that's a 1 to 7 risk to reward ratio. Now, are you gonna get that? You can, but you risk the possibility of price actually not coming all the way up to that order block. It can come into that 8-hour order block, right? And we'll see price, continue downward from there. So that's where I would typically like to enter the trade, and I won't have to stress. And even if price, if I have to eat the drawdown, I'm totally fine with that, because the way I'm looking to trade is to add position on position. Because as price hits this target, or as price comes lower, we're going to get another pullback at some point, and I'll just add on position. So my 1 to 2 trade here, right, if I'm just targeting that monthly low, or my 1 to 1.5 trade, actually, if it's panning out and I want to increase that, I can always increase it by adding more positions. So that's that. I hope you took something from this. Please make sure you smash that like button, smash the subscribe button, and I'll see you guys on the next one.